It's at a price you can afford. Try it at Lowry Drug on Hartness Road in Statesville.
The following is a paid program and does not necessarily reflect the views of WSIC.
Hello and welcome to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. 4 o'clock hour here on WSIC. If you're a 9 to 5er, you got 53 minutes, 40 seconds until you get to the finish line, and I appreciate so much you spending that time with us here on Dollars and Cents as we give attention to and perhaps even spark some conversation regarding items of financial and economic importance. Now, you know, as a previous listener to this show, we're talking on any number of subjects. We're going to be doing that again here today. We're going to be talking about some companies in a positive light, other companies and sectors perhaps in a not so positive light. But in doing so, you remember, again, as a previous listener, that nothing that we're talking about here is intended as a specific recommendation for you. Meaning that even though we're talking about these companies, and again, we may be talking about them in a positive way, doesn't mean that it's a recommendation for you or appropriate for you to consider. We strongly recommend you reach out to your tax advisor, to your financial advisor, or if you'd like to reach out to us, North Main Financial Group, love to hear from you, love to chat about your particular financial situation and to see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, main like the street, financial.com. We have a contact page on there. Leave us your information. Let us know the most preferred and desirable ways for us to contact you. Again, at northmainfinancial.com. All right, let's get right into it here. I mean, this first segment is called What's Hot. And I'll tell you what's hot, right? The weather. Holy mackerel. And it's not just here in the listening area. I mean, you look around the upper Midwest right now. What did I hear one national news reporter say? Basically from Minnesota to Maine. It is, and in further south, into the southeast. I mean, certainly here in the Carolinas, Georgia, Florida, we're feeling it as well. It's a sweat box. This is usually the kind of weather we're getting in late July and August and those kind of time frames. But we got it here in mid to late June. So ready or not. So that's definitely hot. We're going to be talking about some other hot things here as we get into this first segment. Talking about the kinds of things that are hitting your radar screen, perhaps the headlines you're seeing online, or if you're like me and you still read a newspaper with the black and white print on it, that you're still doing that kind of thing, seeing the headlines there. But we're going to touch on a number of things today. A lot going on. Gosh, I feel like I say this pretty much every week now, but certainly a tremendous amount going on here. And we'll probably throw in a couple of fun anecdotes as well. Keep you on your toes, make sure you're listening. But let's get into it. Wells Fargo, big deal here in Charlotte. Wells Fargo became a huge deal here in Charlotte. I should say a larger deal here in Charlotte when they acquired the old Wachovia Bank as a result of the movements among financial institutions coming out of the 2008-2009 financial crisis. So Wells Fargo came in, bought Wachovia, which had a huge presence here in the Carolinas and throughout the Southeast and lower Midwest, and then we had Wells Fargo with a presence. And so they have a huge presence here, even though their original and still stated base of operations globally out there in San Francisco, California. But a huge presence here on the East Coast and especially in Charlotte. Came out with an announcement here. Now, there's always stuff going on with Wells Fargo. Huge organization. Ticker symbol William France Charlie WFC. Not a recommendation to buy, sell, or hold the stock in any way with what we're talking about here. So there's a lot that's been going on. And Wells Fargo, like most large institutions, has had their struggles. And they, maybe more than others, have really struggled here over the last number of years as they've had to work through a number of issues. Unfortunately, this is much smaller, not one of the major issues, but definitely one of the items that, well, it's going to sound huge to you and to me and probably most of the listening audience, but probably for them is not as big of a deal. They introduced a credit card here a couple of years ago, and they got into a joint venture with a group called BILT, B-I-L-T. And the idea behind the credit card was to encourage either current bank account owners or current customers of Wells Fargo, or the best case scenario, to encourage folks who previously didn't bank with Wells Fargo to get this credit card and to use it to pay for additional things beyond, quote, normal expenses. And specifically, the optionality to be able to use it to pay for things like rent and also auto loan payments. So big numbers, right? For a lot of folks, their mortgage payment and their car payments are the two largest monthly obligations that they have. And so the idea behind it, and the reason why Wells structured this here a couple of years ago, I believe it was 2022, whenever they introduced this idea, was that, well, folks will put larger balances on their credit cards. They will keep at least a portion of those balances on there, and then they will pay them off, or they won't pay them off, excuse me, which of course makes more money for the bank. Well, very interesting. Now, I say this in the light of the fact, and you've heard me talk about this here over the last couple of months, that we are actually at all-time highs as far as overall credit card debt is concerned, meaning that we unfortunately have increased our credit card debt as a country by about 30% here over the last year. When I say increase the debt, I mean the amount that sits on the card longer than 30 days. We unfortunately have increased that as a country overall by 30%. So huge movement in an undesirable direction insofar as the cost to consumer is concerned. It's a separate subject. We'll touch on that here in a future segment. But with this particular card, this is why it caught my eye. This particular card that Wells Fargo came out with in this joint venture with Bill, it actually didn't work as they anticipated. So folks were putting their rent on it or putting their car loan payments on there, and actually they were paying them off to the extent that in 2 years, now Wells Fargo is in a space where they're losing money on having this card or offering this card, because you can also get points and miles and other kinds of incentives that go along with using this card. They are now losing approximately, this was in the Wall Street Journal, by the way, you can double check me on it, $10 million a month. $10 million a month. Now, again, to Wells Fargo, tens of billions of dollars in market cap, actually over 100 billion, excuse me, in market cap. So it's not going to hit the overall radar screen, but still, you lose 100 million plus in a year. That's definitely going to get on somebody's checklist of things to address. And that's what's happened here. So actually, Wells Fargo, it's not funny, just kind of ironic, really, is why I'm chuckling at it. Because again, we have on the one hand, credit card debt increasing significantly here just over the last 12 to 18 months as a country. But in this particular card segment, which again, I understand the thesis behind it. They were wanting folks to put larger expenses on their credit cards with the hopes that they would keep those balances on their credit cards for longer and the bank would make more money. Hasn't happened that way. Very interesting to see. Not the kind of thing that I would have anticipated, even if somebody had said it to me and said that this is what they were thinking about doing. So anyhow, just kind of a little bit nuanced, but still important, especially in light of where overall credit card debt is right now. All right, let's keep going on what's hot. Relatively, let's call it small cap size acquisition by Honeywell, HON, Henry Oscar Nancy, large presence here in the Carolinas as well. Big company. Made a $2 billion acquisition of a group called CAES Systems. Now, that's an acronym for actually an amalgamation of a couple of different companies that Honeywell acquired here. I say that, A, because it's a $2 billion acquisition. They're paying cash, which is always a very positive sign in my kind of world for that kind of thing. And then in looking at the course that Honeywell is on right now, it continues a trend, and that's really why I'm bringing it to your attention. It continues a trend by Honeywell specifically, but we're also seeing this across some other defense contractors or other folks like, say, Raytheon and like Lockheed Martin, who are heavy into the defense contract business, making small level acquisitions. Actually, by my count, Honeywell's made at least 4 here in the last year, the last 12 months, of this size and a little bit smaller. So kind of interesting to see that. Again, Honeywell, Henry Oscar Nancy, not a recommendation to buy, sell, or hold this stock, but kind of interesting in that trend, especially in the defense sector when we're looking at, why folks are spending their money and where they're seeing value. Well, friends, we're going to hear from our sponsors here for a few seconds. I appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial. Hold tight as we come back here on WSIC.
There's more of Dollars and Cents with certified financial planner Joshua Dobi on the way from 105.9 100.7 WSIC.
Well, what would the first day of summer be like without some 90-degree heat? Summer officially starts this afternoon at 4:50. If we're being technical about it. Otherwise, plenty of heat and still no decent shot at rain. Near 90 this afternoon, staying mild with a mostly clear sky tonight. Temperatures falling back into the upper 60s to near 70. Low 90s on the way for our Friday. Mid-90s for the weekend, feeling more like 100 degrees. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Listen, save, enjoy. The WSIC app, available now in your app store.
Here is your WSIC community calendar. Langtree Live, get your weekend off to an early start on Thursday night with a
2
Kids
minutes.
in America concert. This totally 80s tribute band will get you up and dancing. Event time is 6:30 p.m. with the concert beginning at 7. We will see you and your chairs Thursday, June 20th at Langtree, Lake Norman. Friday night at RevFast in Mooresville is the monthly Hot Rods and Hops Car Show. Cool cars, motorcycles, and trucks will be on display. LKN Mobile Eats and Hop Town Brewing will be on hand with smash burgers and cold brews. Join us Friday after 5 p.m. at the late Apex Storage Condos in Mooresville for Hot Rods and Hops. Birkdale's Live Under the Oaks concert series continues on Friday. The Ryan Bumgardner solo musical performance begins at 6 p.m. Kick back and relax on the green in front of the stage at Birkdale Village in Huntersville for the free Ryan Bumgardner concert Friday night. The annual Symphony in the Park is back this Saturday in Cornelius. Bailey Road Park welcomes the Charlotte Symphony and fireworks.
1
Bring
minute.
your chairs and blankets to enjoy this free, family-friendly show. The Symphony in the Park program and fireworks celebration begins at 6 p.m. Saturday at Bailey Road Park in Cornelius. The Kane Center for the Arts Week 3 of summer camps begins Monday, June 24th. Morning and afternoon camps for ages 5 to 17 include art, ceramics, paint, and clay. For more information on summer camp programs, visit canearts.org. That's CAIN arts.org. The Cookout Summer Shootout
30?
Series is racing ahead at Charlotte Motor Speedway. The 10-race series night number 4 is on Tuesday, June 25th. Visit charlottemotorspeedway.com for tickets, details, and information. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
10 seconds.
It's Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second quarter football reference. And producer Bill, he got tired of me asking and bringing this up every time, putting him on the spot. So now he tells me ahead of time, 77 days, in case you're wondering, 77 days until we're getting ready for football season. And I know I'm this way, producer Bill, and I am going to put you on the spot here. Hope springs eternal for our Carolina Panthers.
Indeed.
I mean,
no reason to not be optimistic right now.
I mean, everybody's record is the same. We
Right.
have the same opportunity to make the Super Bowl at this point that everybody else does.
Yes. For now.
I mean, that is a mathematical fact, right? I mean, that we have
Correct.
the same opportunity. So I mean, they can't dispute it. I don't want to hear any of this, odds. I mean, we got odds for everything now. Gosh, you watch any sports news program, they got odds. I mean, I all aside, everybody's 0-0 right now.
Exactly.
Nobody gets any wins given to them, right?
Correct. You are on
All
it.
right. See, all right. Hope springs
77 days. A little bit cooler weather, hopefully, too.
You know what? That's what I was going to say. Holy smokes! I mean, can you imagine going to football camp, to training camp in this kind of weather? I mean, it's never a pleasant experience. It's not like they're sitting on lily pads drinking pina coladas anyhow, even if it was perfect weather.
Correct.
But holy, I can't imagine in this kind of heat. So anyhow, thank you all for hanging with us here. Second quarter here on Dollars and Cents. We were talking about some things that we're talking about financials with Wells Fargo. We were talking about Honeywell in terms of their acquisition and acquisitions that they've made here over the last calendar year. Very interesting because especially when you look at companies, now these aren't the largest ones about which you're going to hear, but when companies make several of them, and especially with like Honeywell, where they're doing it with cash. So they're not even wanting to dilute the stock. They have the cash, and that's how they see a higher ROI for their cash, which, by the way, takes on a different algorithm at this point because of the risk-free rate being now closer to 4 or 5%, because that's where the treasury market is right now. It's different, which means, again, implied in that, without getting too granular, I know that got a little in the weeds there, but the implication is we can make substantially more than that by making an acquisition. So we can make substantially more than 4 or 5% a year by making this acquisition. That's a positive thing, maybe with regards to the company, maybe with regards to the sector, maybe with regards to the economy overall. With that, we don't know. but it certainly is a positive thing with regards to their anticipation about the possibilities to be able to make more on their capital. All right, so we've talked defense contractors, we've talked financials. Good segue here. You betcha. White Castle hamburgers. You heard me right. White Castle hamburgers. Now, if you are one who has not had the opportunity to indulge in White Castle sliders, well, that's something you need to put on your bucket list, according to me. No, don't put that on. Well, you might put it on your bucket list. I certainly put food things on my bucket list when we're looking at it here. And anyhow, White Castle, couple hundred locations at this point, mostly upper Midwest over to the East Coast. That's where my exposure to it has been through the years. Now, producer Bill, we talked about this because there is a freezer, supermarket freezer version of White Castle sliders as well. You have partaken.
Oh yes, especially in my college days.
I was going to say it is a pretty classic college late night enjoyment vehicle.
Correct.
So I'm very glad to hear that. I likewise, and maybe post college, but I'm not going to admit that to anybody except on the air. But anyhow, so White Castle. The reason why I'm bringing it up, obviously, we love food here on Dollars and Cents. We love it here at WSIC, but also to bring up something that they announced here recently, and is part of a trend, and it's part of a trend within the quick service restaurant industry, but it's also with regards to a trend just in terms of where we are economically. And that's why I'm spending a little time with it here. So White Castle came out and said that they're going to be starting within their drive-through experience, not at every location, but with dozens of their locations. They're going to be implementing an experience through their drive-through where there is zero human contact. Now, what that means is from the time that you pull up, that you order, through the experience of paying, and then you receiving your food, there is zero human contact. You are not talking to a human voice. You are not seeing a human person behind the window in the drive-through experience. It's going to be done in significant measure with artificial intelligence, at least insofar as the inner workings of the White Castle restaurant are concerned, in terms of producing the food and getting the food out to you in some kind of non-human involvement kind of way. Very, very interesting to see this kind of thing, to see White Castle doing, which, by the way, I bring up White Castle because White Castle is kind of a cult favorite, at least among folks that I know, and I love it as well. But this isn't unique to them. McDonald's, KFC, Taco Bell, all have various stages of testing of this particular concept. If you've been into a McDonald's as well, they even have kiosk style experiences right in the lobby, right in the space where you order. So you can go to the counter and speak to a human, or you can literally enter your order right on a kiosk there in the entranceway or in the order space where you make those kinds of orders. I say that because that's more indicative of a trend, especially when you're talking about those big names in that space pursuing that kind of thing. But I think it also speaks to a larger macro trend when we're looking at things economically, because there are several other factors in the algorithm of how these companies keep their margin, increase their margin, how they make money ongoing, and not the least of which is inflation, meaning relative to the raw products that they're bringing in, those costs have gone up dramatically here over the last several years. And it's not just the QSR space, but it is the full service restaurant space, any prepared food kind of space. The costs have gone up dramatically here over the last several years. COVID restrictions definitely kicked that into high gear, but we're still dealing with it now as inflation stays with us, especially in that kind of space. So these kinds of restaurants, and here we're talking about White Castle specifically, but certainly the QSR space, the quick service restaurant space, looking to figure out ways to maintain and even increase their margins. And unfortunately, one of the ways in which they can do that is to reduce their labor cost. Most businesses, not all, but most businesses, their single largest expense is the labor, which means the people. And so if there's a way to reduce that, again, I'm not advocating for companies to do that in any way, shape, or form. What I'm saying is this is a fiscal reality, especially when we have spaces like California, for example, not picking on them, it's a fact, where they've started to mandate a $20 per hour minimum wage. This is not me advocating for or against that, but you heard almost concurrently, especially from the quick service restaurant space, about ways in which they were either A, going to reduce staff, or B, they were going to slow hiring. And a very, very interesting, it happened almost at the same time. It was almost concurrent. as that happen. And then we're seeing things like this, where again, White Castle, Taco Bell, KFC, McDonald's, looking for ways in which they can reduce their overhead to keep their margins. Again, I'm not advocating one way or another. This is not a political statement. This is about the fiscal reality of running these kinds of spaces and the kinds of things that they're looking to implement in order to do that. So very interesting. It's going to be interesting to see how this trend continues or doesn't as the the fiscal demands in one way, shape, or form either mandate or don't mandate that kind of thing. So we're going to see how that's going to take its shape. But it's certainly, that's why I'm bringing it up here. I'd call it a trend at this point. I think it would be hard to disagree that that this is indeed a trend and that it's going to be around for a while. How long will it be around? Tough to know. It's going to depend on how much it impacts the margin in terms of practice and the reality of it. Are the orders going to be correct, kind of thing? Are they going to need to invest even more than they thought in the technology end of things to be able to provide that technology experience short of people? It's all that balance, and a lot of it, and that's why they do these in test markets. As I mentioned, White Castle's doing it in about 100 stores this year. That it's all going to be about that actual real world experience to see if it's something they're going to continue doing. All right, let's keep going here on what's on. Got to talk about gold, and again, not a recommendation to buy, sell, or hold gold. Gold you can actually buy directly. Gold you can also buy as a function of a securitized asset. And before I put you right to sleep with that idea, there are ways to buy gold in the markets, not the bullion directly, but securities which represent the price of gold or actual physical gold holdings. You can also buy gold mining companies, other entities which are directly related to either the mining of or the production of gold as well. So there are all kinds of ways in which you can do it. Again, not a recommendation to buy, sell, or hold gold, but it's in a multi-week high here, and I don't want to get too carried away with that, except that follows a space where it's off of a high of about 15 months, almost 18 months at this point, about $2,300 a troy ounce as of the time of this live broadcast, or as of the time of this recording. Kind of interesting to see. What's the reason for that? Can't say for sure. There are some so-called experts that are out there giving some reasoning for it. Some folks are even trying to tie it into inflation. We're not there anymore, folks. There isn't a space to which we can legitimately look where we can tie gold to an inflationary space, in my opinion. Meaning that we are so far removed from anything that has to do with the gold standard insofar as the US dollar is concerned, that I don't think there's a legitimate correlation. Now, that doesn't mean that when inflation goes up that people aren't buying gold. I'm not saying that. They may actually do that, especially with that idea in mind. But in terms of the actual correlation between the price of gold and inflation, I have to say at this point, since we are almost exactly 50 years off of the gold standard, that probably not the case anymore. So kind of interesting, though, when we're looking at it, kind of interesting. Gold is widely held, especially during periods of uncertainty. You tend to see a spike up in terms of the amount of gold which is purchased. I got to include silver in that mix as well. So gold and silver. And the only reason I'm including those two without the other precious metals is those are the ones most widely held and widely traded. Gold specifically is the most widely held and traded metal, precious metal that's out there. So when we're looking at those kinds of things, and we're definitely seeing more folks own them, that has been a part and parcel reason for the price appreciation that we've seen here over the last now almost a year and a half. And so kind of interesting to see that. What does that mean in terms of inflation? What does that mean in terms of what public sentiment is? Well, we'll talk about that more in the second half here on Dollars and Cents. I appreciate much you hanging with us, folks, here on WSIC. Hold with us as we go through some time with our sponsors. Coming back here in just a few minutes.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
What would the first day of summer be like without some 90-degree heat? Summer officially starts this afternoon.
Well done. Got a little over 3 minutes. 3 minutes.
Otherwise, plenty of heat and still no decent shot at rain. Near 90 this afternoon. Staying mild with a mostly clear sky tonight. Temperatures falling back into the upper 60s to near 70. Low 90s on the way for our Friday. Mid 90s for the weekend. Feeling more like 100 degrees. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Hello, everyone. This is Joshua Dobi, president of North Main Financial Group. At North Main Financial Group, we move to where you need us.
This guy.
Investment management, insurance planning, and estate strategies. No two people are the same, so we customize our planning based upon your needs. Reach out to us at northmainfinancial.com. That's northmainfinancial.com.
I'm sold.
Horn Heating and Air Conditioning is looking for HVAC rock stars. If you want to work for a company that values its employees with great pay and benefits, then give Horn Heating and Air Conditioning a try. Horn Heating and Air Conditioning, hornhvac.com.
Yes, spring is here, and at Randy Marion Chevrolet in Statesville, Randy Marion Ford Lincoln, we want to make sure your vehicle is in tip-top shape, ready for the spring driving months, moving right into summer. Bring that vehicle by one of the locations here in Statesville. Let us do a complimentary multi-point vehicle check for you, just to make sure everything's good to go. Randy Marion Chevrolet in Statesville, Randy Marion Ford Lincoln. You know where we are?
Get in to Randy Marion Chevrolet, Randy Marion Ford in Statesville.
The Statesville Family YMCA reminds you that older adults and those with chronic health conditions don't need to feel they must accept impaired balance and limited mobility. Build strength, improve balance, and gain confidence in your mobility through the Moving for Better Balance program. For questions and additional information, email C. Mullins at ymcanwnc.org.
This is a Bloomberg Money Minute. A new warning about a possible bubble in the stock market. Forecaster Barry Bannister over at Stifel says investors are in full-fledged bubble mania mode. Bannister says the S&P is poised to reach 6,000 this year before a big drop. What's a big drop? He says stocks may plunge as much as 20% from peak by 2026. Another cyber attack has hit the software provider thousands of car dealerships rely on to run their business. CDK Global says it's the second major disruption in as many days, telling customers it had shut down most of its systems again. Possible dramatic advance in the fight against HIV.
Right.
Testing of Gilead's experimental
30
twice-yearly shot shows it prevented 100% of HIV cases in women and adolescent girls in Africa. Shares of the biotech company jumping today. And Nestle says it's inevitable chocolate prices may go up, and it says we might start cutting back on the amount of chocolate we eat as a result.
All right.
Denise Pellegrini, Bloomberg Radio.
10 seconds.
We're back now with more of Dollars and Cents with your host, certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much. Hanging with us here, second half football reference here on Dollars and Cents, talking about all things economic and financial. Before we get warmed up, and Producer Bill, I'm bringing you in on this. I just heard that on that Bloomberg Money Minute, just before I'm back online, that Nestle is expecting that the price of chocolate is going to continue to increase and that there is concern about that dampening demand, which is a very reasonable kind of economic expectation, right? Price goes up, fewer people consume. I consider it now incumbent upon me, you, the chief, Justin, maybe, that we need to make sure that demand does not go down.
This is a call to action. I'm with you.
I feel a significant sense of responsibility,
right.
and I do not want to let anybody down.
Right.
So I am more than willing
I'll
to
pick up the slack.
To pick up the shield and go to battle. So anyhow, interesting. It's because we talk about that. We talk about the price of cocoa, which is the primary ingredient in the formulation of most chocolates that we consume. Actually, for a while there, it hit a 12-year high. I mean, it was outrageous. So it doesn't surprise, unfortunately, that Nestle is still saying that kind of thing. It had come down off of that high a little bit, but still much more expensive out there, unfortunately. So we'll do our best to keep that consumption going, or at least do our part. Anyhow, all right, let's keep going here on Dollars and Cents. We've talked banks, defense contractors, White Castle sliders. See what you missed. See if you can hear this again up on the WSIC app. Go to the App Store, download WSIC app. You can hear Dollars and Cents. You can hear all of the great shows that we got here on WSIC. So make sure you do that. If you don't have, what's really nice, you travel. Maybe you're in a space where you're outside of coverage. You don't have satellite radio or if you're like me, you're just in all kinds of areas where you just don't have that satellite radio experience where you can access it quickly, great to go on the app. You got a cell signal, you can listen to us on WSIC. Make sure you do that. Make sure you check that out. Yes, sir. Yes, sir. All right. I got to spend a little bit of time on this, and it was amplified a lot by the announcement of, and we did an interview on Good Morning Elkan, which, by the way, Good Morning Elkan, Monday to Friday, 7 to 9, Justin, Bill, Mamie, great stuff. You're going to learn something, and you're going to chuckle too. Great stuff. Make sure you do that to start your morning. But they had a gentleman who, for me, has been a very good friend for a long period of time, and one who has really set the bar high in terms of community investment and commitment to this region, and that's Bob McIntosh. And again, excellent lawyer, been around for a long time. McIntosh Law Firm that he started up in Davidson there, and he's going to be part of the family here at WSIC. But I bring that up because Bob had mentioned during the course of his interview one of the dynamics, and we see it at North Main Financial Group as well. One of the dynamics that is in motion right now and will continue to be in motion here for the next 2 to 3 decades, and specifically, it is the largest amount of wealth transfer in the course of human history. Now, you could say, well, we have more people on the planet now, we have accumulated more in terms of dollars, the inflationary aspects of our currency, all that true. So that I'm not taking away from all of that, but the fact still remains that we are going to have the largest. We're in the middle of it. We're it's coursing through right now. But over the course of the next 2 to 3 decades, that will continue the largest wealth transfer in the course of human history. So we're talking about that, and when it comes to the work that Bob and his group do over there at McIntosh Law Firm, what we do here at North Main Financial Group, we're not lawyers. They're doing the legal end of things. We're managing the financial aspect of things. But we see it all the time. I mean, literally, the meeting just before I came on live here was an inheritance scenario. So I'm going to take a few minutes here on what to know, what to do when you have an inheritance. Now, sometimes when we hear the word inheritance, I mean, I don't know if you're like my experience growing up. Whenever you heard that somebody inherited something, you had this huge dollar amount in mind, right? I mean, almost like, this unexpected windfall. I never have to work again. Almost a lottery style experience, right? Well, let me tell you that the majority of inheritances are not that way, meaning that mostly folks are receiving, let's call it quite small to modest level of inheritances. There are large ones that are out there as well, no doubt about it. But generally speaking, when you're looking at the masses, the inheritance amounts per person, when there is one, are relatively modest in size. So what I'm going to be talking about here is not just if you hit the lottery or that unexpected aunt that you knew all those years ago leaves you a big pile of money. I mean, this certainly comes into play for that as well. But really, just some things to keep in mind. And this is really important stuff. And I say it because it's easy to make decisions if you are one who inherits, whether it's a small amount or a large amount. It's really easy to make decisions that tax-wise could be avoidable. And yes, this is mostly tax planning or tax thoughts that I'm going to share with you, but it also has to do with knowing what to do when you inherit. And like I said, that was literally the meeting just before I came on live here. And this is a meeting we have with regularity, either with current clients or with new clients. But a couple of things when we're talking about inheritance, what to do if you are one who is getting ready to or is inheriting. First thing is understand what it means to be a beneficiary. Meaning being a beneficiary is not the same for all kinds of assets. Being a beneficiary is different if you are the beneficiary, say, on an insurance policy or an annuity, and being the beneficiary on a trust, which owns real estate, is something different altogether. And there are a whole bunch of things in between. So it may be a place where you are the beneficiary of an insurance policy, perhaps of some real estate, maybe also of an investment account, perhaps even a bank account, or even of a safe deposit box where you don't have any idea what's in it. There are all kinds of spaces where you can be a beneficiary. It's important to understand what the different ramifications are of each, which allows me to segue into the next point. Be aware as much as you can, and if you're not aware, make sure you secure the help of a professional to understand the tax impacts of different assets. And I'm going to use one example that we see constantly at North Main Financial Group, but there are several others as well about which you want to be aware. Let's say that you are the beneficiary of an IRA, and a regular investment account. And I'm going to be very general here because there are always exceptions. There are always nuances. Everybody's situation is different and unique. We strongly, strongly recommend reaching out to legal professionals, tax professionals. You can always reach out to us at northmainfinancial.com as well. But for this example, understand the difference between being a beneficiary on an IRA or a retirement account and on an investment account that's not an IRA, or we sometimes call non-qualified. Very different tax impacts there. Meaning that with the IRA, if you do a full withdrawal there, very likely, not always, especially if it's a Roth IRA, this doesn't apply. But if it's a traditional IRA, a traditional 401k, and you are the beneficiary and you do a full withdrawal, well, all of that money may be taxable to you that year. It may be. Again, always caveats apply. But if you do the same thing with non-qualified assets and they're structured correctly, it's possible under current tax law that they have received a step up in cost basis, meaning essentially that if you do a liquidation of the same amount from a non-qualified asset, there is a possibility that your tax bill will be significantly reduced and perhaps even eliminated altogether due to the step up in tax cost basis. Again, everybody's situation is unique. That's not blanket across the board, but understanding the difference between being a beneficiary on a non-qualified asset and a qualified asset is very, very important. And folks, we see it all the time. Not necessarily when folks inherit tens of millions of dollars, although we've seen it there as well, where the decisions made are not advantageous. But sometimes when it's even a smaller amount, and there are ways to avoid or to mitigate some of the tax impacts of inheriting certain assets or inheriting certain accounts, you want to be aware of that. You want to be aware of what that means to you. Also, when it comes to life insurance, and this is just life insurance standing by itself, life insurance, one of the benefits of it, if you are the beneficiary of life insurance, is income and estate tax friendly. It's not always exempt, but it is income and estate tax friendly. So that's something else that you want to keep in mind as well as far as tax impact is concerned. Very, very important, very, very big deal. I don't think I can spend too much time on that. And even to reiterate about what it means in terms of being a beneficiary on certain assets. It gets more complicated, especially if there are multiple beneficiaries for the same asset. For example, we often see that with real estate. I'm sure the Chief Justice, especially with his legal and real estate background, would be able to opine into this very well. But when you have multiple beneficiaries of a single piece of real estate, and let's say one would like to sell the asset, the other doesn't want to sell the asset, well, I recommend you bring in some legal counsel, some financial counsel to help you with that, because that can be tricky. Also, how do you make sure you don't trigger a tax event for one person, maybe even innocently, by making a decision in a specific direction? So you want to make sure, you want to bring in professionals. If you're not aware of it or willing to do all of that legwork yourself, bring in the professionals who are doing this kind of thing all the time, because there may be some very simple things that you can do which can sidestep some tax impacts. I mean, just had an instance here last year. This was actually as a result of an unknown, meaning they didn't know that they were the beneficiary on a particular retirement account, and they just decided that before they called us, they weren't a client at that point, that they would just liquidate the account and then call us. Well, they did, and it was fully taxable, and it was a good sized dollar amount, and so they had this huge bubble of income last year, which ratcheted up through the various tax brackets, and they ended up owing a big tax bill where if they would have literally checked a different box, they wouldn't have had to pay that tax, and we could have tax managed the distribution aspect of things. So we see it in real time. We see it happening with clients and prospective clients all the time, and that's why I'm spending time on it here on this What to Know segment with regards to inheritance. And if you're a beneficiary, if you don't understand the tax impacts and ramifications between qualified, non-qualified assets, real assets, passive assets, all that go along with that, make sure you reach out to a professional. Well, friends, I appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial. Hang with us as we get into the fourth quarter here on WSIC.
We'll have more of Dollars and Cents with certified financial planner Joshua Dobi following these brief messages on 105.9 100.7 WSIC.
What would the first day of summer be like without some 90-degree heat? Now, summer officially starts this afternoon at 4:50.
About 2.5 minutes.
Plenty of heat and still no decent shot at rain. Near 90 this afternoon, staying mild with mostly clear sky tonight. Temperatures falling back into the upper 60s to near 70. Low 90s on the way for our Friday. Mid 90s for the weekend, feeling more like 100 degrees. degrees. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here is your WSIC community calendar. Langtree Live, get your weekend off to an early start on Thursday night with a Kids in America concert. This totally 80s tribute band will get you up and dancing. Event time is 6:30 p.m. with the concert beginning at 7. We will see you and your chairs Thursday, June 20th at Langtree, Lake Norman. Friday night at RevFast in Mooresville is the monthly Hot Rods and Hops car show. Cool cars, motorcycles, and trucks will be on display. LKN Mobile Eats and Hop Town Brewing will be on hand with smash burgers and cold brews. Join us Friday after 5 p.m. at the Late Apex Storage Condos in Mooresville for Hot Rods and Hops. Birkdale's Live Under the Oaks concert series continues on Friday. The Ryan Bumgarner solo musical performance begins at 6 p.m. Kick back and relax on the green in front of the stage at Birkdale Village in Huntersville for the free Ryan Bumgarner concert Friday night. The annual Symphony in the Park is back this Saturday in Cornelius. Bailey Road Park welcomes the Charlotte Symphony and fireworks. Bring your chairs and blankets to enjoy this free, family-friendly show. The Symphony in the Park program and fireworks celebration begins at 6 p.m. Saturday
Just under a minute.
at Bailey Road Park in Cornelius. The Kane Center for the Arts Week 3 of summer camps begins Monday, June 24th. Morning and afternoon camps for ages 5 to 17 include art, ceramics, paint, and clay. For more information on summer camp programs, visit canearts.org. That's CAIN arts.org. The Cookout Summer Shootout Series is racing ahead at Charlotte Motor Speedway. The 10-race series night number 4 is on Tuesday, June 25th. Visit charlottemotorspeedway.com for tickets, details, and information.
20
keep up
seconds.
With all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
10 seconds. Finish strong.
Call now to speak with certified financial planner Joshua Dobi at 844-STUDIO-4. It's dollars and cents on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much. Hanging with us here. Fourth quarter, stretch run, 11 minutes, 57 seconds until you hit that 5 o'clock hour. And I appreciate so much you hanging with us here as you make that sprint towards the tape, as we're giving attention to all things financial and economic. And right before we went to break there, at the end of that third segment, we were talking about the importance of understanding what it means to inherit. And like I said, if you're like me, when I was growing up, when I was a young person, you heard inheritance. You had to, probably because you saw it on TV, right? Rags to riches kind of story, huge inheritance kind of thing. And so you had this idea that everybody inherits big piles of money. And the truth is that's just not the case. Actually, most of the folks who inherit, when we're looking at the masses, are inheriting more modest amounts than probably what is pushed through our popular media outlets. But it is important that you understand, especially on the tax end of things, the different ramifications, and then even the different responsibilities as well. If you decide to be one who, let's say, you inherit a piece of real estate, or let's say that you inherit a working farm kind of thing, and you're going to maintain it, to understand what that means, financial implications, maybe you're inheriting a workforce, maybe you're inheriting a small business of some kind, understanding what that means. I mean, there's a lot that goes into it. I'm hyper focusing on the financial aspect for the obvious reasons here on dollars and cents, but a lot that goes into it. So if you're not one who's comfortable with that or going to spend the time and bringing yourself up to speed, strongly recommend. Get a good team around you, legal, like the folks up there at McIntosh Law Firm, or financial, and also with folks who may be tax-wise very well inclined in that area as well. So important to bring on folks there. All right, let's keep going. Got to cut a couple other hot items here. I mean, it's tough to say that this is modest, at least in our region. Big news overall. Big news here, and because Community Health Systems is a publicly traded company, first have to say CYS, not a recommendation to buy, sell, or hold the stock there. But Community Health Systems, Novant, known very well here in our Charlotte, Lake Norman regions, really around the Carolinas, all around the Southeast. Obviously based here in in Winston, and so very well known around here. But big news. they had attempted to buy two separate hospitals from community health systems. And again, Novant is not publicly traded. They are nonprofit. CHS is publicly traded, and even though the ticker symbol is CYS, and then they are a for-profit entity as well. $320 million was the proposed buyout amount for the Lake Norman Regional Hospital System and the Davis Regional Hospital System. $320 million. And it looked initially when the FTC, so the Federal Trade Commission, takes a look at it in terms of antitrust concerns or monopolistic concerns. Is there going to be too much of a concentration with one particular business? Are they going to own too much of the market? And it's gray area, folks. It's hard. That's why these things often go to court on these kinds of things. Initially, it was ruled in Novant's favor to move forward with it. Just got word here, and the press release came out yesterday that, and I'll say unfortunately, I'll say from my standpoint, I'm biased. Full disclosure, I sit on an advisory board for Novant Health, so I definitely want to disclose that too with what I'm going to say next. So unfortunately, that the FTC went on appeal, and in appeal it was struck down. Meaning that the buyout is not going to go through. So Novant came out with a statement saying then that they were going to look at other possibilities, that they were not going to be pursuing this as it's structured today any further. Don't know what that will mean for the future. Don't know what that will mean as far as any other future buyout attempts or other entities. Folks, this is not unusual. This kind of thing is happening a lot in our healthcare industry right now, especially with hospital systems. The differences between nonprofit and for-profit systems, there are some systems which are doing well, either non-for-profit or for-profit, and there are a whole bunch which are challenged. And I'm not saying that's true about Lake Norman Regional and about Davis Regional. I'm saying that there are in many instances right now where we're seeing these systems attempt to consolidate. And sometimes it goes through. I know UNC Health Systems up there in Chapel Hill had attempted a couple as well, as Wake Forest Baptist as well. I mean, it's happening a lot right now. So this is just a trend that we're seeing in the industry. And this particular one was shut down. It hit the Wall Street Journal as well because of the size. Again, Novant shut down in terms of their acquisition of Davis Regional and of Lake Norman Regional by the FTC, by the Federal Trade Commission. So, and that's what the Federal Trade Commission does. And like I said, I put in the word unfortunately. I do sit on an advisory board for Novant, so I just want you to know that from a disclosure standpoint. But it's going to be interesting to see what happens next, as it always is, because this is definitely an industry, definitely a sector where we're starting to see more consolidation there. So kind of interesting stuff. All right, let's talk markets here. I mean, I always say it to the fourth quarter. I just like to leave you on the edge, right until the bloody end. Talking about the markets there. I know you want to hear about it. Folks, things are narrowing up. They really are. And we're starting to hear the bubble discussion with greater frequency. And when I mean bubble, I'm talking about those companies' stock prices, which have done, I can't even say well, they're stratospheric at this point in terms of the amount of movement they've had in such a short period of time. I mean, it's unreal. I mean, I'm looking at the tech sector. I'm looking at the semiconductor sector. Not all tech companies, not all semiconductor companies. I'm not saying that at all. But what I am saying is that's where we're seeing the concentration of the companies which are just moving almost exponentially in terms of their stock prices in such a short amount of time. And I'm starting to hear more of the bubble talk. Now, the fact that it's being talked about as a bubble, actually maybe a little counterintuitive, it's actually a good thing in my world. It's when we, the market, are pretending that there's not a bubble or that a bubble can't exist, maybe is a better way to describe it, that I get more queasy. So I'm thankful that there's some discussion about it. But the other thing that's true is, and I heard this argument today as I was listening to another call from an analyst this morning, is that even with some of these exponential moves, in some cases, depending upon how you value companies, there can be arguments made that there's a justification, especially not only for what's being produced today, but what can be produced in the future. And that's what we're trying to buy, right? That's we're buying we're not always buying a discounted form of future cash flows from net future cash flows from a company like we used to do early in my career. We do that still in some instances, but there are other models that are used also in terms of valuing companies and establishing stock prices by the market. So it's a dynamic time. So what I would say to you in this instance, as you've heard me say now for, who am I fooling? A year You've heard me say this. If you're a previous listener here on Dollars and Cents, presented by North Main Financial, be cautious. And yes, you can make the argument that you should always be cautious, right? There should never be a time where you're not cautious when it comes to your portfolio, when it comes to your investments. But I'm really saying it from the standpoint, I'm really saying it from the context of be cautious of chasing the hot names. That's not to say they don't deserve it. Like I said, I've been saying this for a year. I raised my hand. I mean, if you'd have listened to me a year ago, and I've had plenty of you tell me this, that if you'd have listened to me a year ago, you'd have missed out on so much upside. You're right, especially with these hot names, no doubt about it. You would have missed out on a lot of upside with some of these red hot names, and that's part of it. And that part actually doesn't concern me as much because there's wisdom always in rarely being 100% in or 100% out. It's always wise to take a look at capturing at least some of your gains. You're one of these ones who's had, the stock, one of these stocks that's been going red hot for a long period of time. Why not take a little bit of that gain? Why not scrape some of that proverbial cream off the top, stuff it into something that doesn't go down in value, and play with the house money? I don't think there's anything wrong at all. Actually, I'm certain, frankly. It's one of the few instances that I could say I'm certain there's nothing wrong with that. Now, you could make a mathematical argument that you may miss out on some upside. Yes, absolutely true. You may also protect yourself on some downside. So it's an important decision to make. It's not that everybody's space is the same. I'm definitely not saying that. It's not that everybody should make the same decision either. That's definitely not what I'm saying. It's not a blanket, everybody should sell their winners. No, of course not. You never hear that from us here on Dollars and Cents. Rather, it's just a word of caution, especially when we're seeing things that are performing so far above average. Because you know how we get an average, right? You perform a little bit above the average, and then you perform a little bit below the average, and that gives you can say it with me, the average. All right, so just keep that in mind. It's not a perfect science. If it was, everybody would make perfect decisions when it comes to buying and selling. Of course, that's never the case, because for every instance that somebody is buying, newsflash, somebody is selling. On the other side, every time somebody is selling, newsflash, somebody's buying. So it's important, and I'm chuckling because we pretend like that's not happening. I mean, there are reasons why, 1,000 reasons on both sides of that algorithm why folks buy and sell. It's not the same reasons. It's not because one person likes the stock and one person hates the stock. Maybe somebody has to do it for tax reasons or legal reasons, or there could be any number of, literally hundreds, maybe 1,000 reasons why folks may or may not be either wanting to hold, or they may or may not want to hold on the other side. But it's very important to look at that in your own space, not the space of your neighbor, not the space even of a family member, but to look at it in the space of where you are, and ask yourself. And I'm more conservative, you know me. I'm a bird in the hand kind of guy. Ask yourself, are you comfortable, with your portfolio pulling back significantly and weathering it out? I'll tell you that I get one answer usually when the market's hot, and those same people are giving me a different answer after the market has gone down. That's why I'm encouraging you, think about it now. It's best to be thinking about that into strength. That's where you want to be. You want to think about it in strength. Once it goes down, it's too late. It's too late to have that kind of thought process and discussion, and you can make that kind of decision into a space of strength. And folks, I know it's tough, especially if you're one who owns one of these high flyers. There's no doubt about it. It's hard, especially if you got out and you're watching it still go up. I get it. I mean, that missing out aspect of things, that feeling is real. But there's also a feeling when you watch something go down that you could have prevented. And that's something you want to keep in mind. So part of my responsibility to you here, part of my job here on Dollars and Cents, is to talk about things in anticipation of what may happen. After they're already done, then I'll just be like everybody else on TV, talking about what's already occurred. Well, that's kind of easy to do, but I like to talk about those things in advance. Well, friends, I appreciate so much you hanging with us here on Dollars and Cents, presented by North Main Financial. Always appreciate how you give us your time, talking about all things economic and financial here. Make sure you tune in to us next week, Thursday at 4 p.m. here on WSIC, as we again give attention to all things that are happening to us in the financial world. Thank you so much. Looking forward to seeing you then.
Serving you better than ever before. WSIC, Statesville, W290DK.